traders, this is SageFT from the live trading desk once again for the weekly Sunday night review and Rev-UP. Well, either your team made it to the playoffs or they didn't. I hope your team was one of them. Let's go Packers. We'll see. We've got the toughest division ever in the history of football, so we'll see how this plays out. This is going to be amazing. We're going to kick this off. Let's get going here. Here's what the chart looked like when we started the week. All right, here's the 27th. Okay, so now what we're looking at on the daily chart is coming in Monday, we had the lay of the land that looks something like this. Okay, so the first thing that came to mind was, why did we not go above here? Second thing that comes to visual mind here is we have this order block that was never filled. All right, so Friday they turn it down. They try to buy it back some. But they were unsuccessful to get it over the 50% mark of this large bar. So that's kind of what we're left with here. Let's go to the 4-hour chart, see what we're left with here. They try to reclaim this entire removal of liquidity bar. Now, notice that we have this mitigation block, breaker block, however you want to look at it. Okay, we're going to call it both of them for now. Notice that we've come up into it and we can't break through it. Red flag on the long side coming into the beginning of last week, which was Monday, right before the split week due to the holiday on Wednesday, New Year's. All right, let's go to the 15-minute. This is what it looked like. You can see that they just couldn't get it. They got a double, possibly triple top. They got a nice complex head and shoulders. And so then as it's coming down into this breaker block, possible support, what we notice is they just go straight through it. So if we zoom out, they went straight through it. This is where they actually started to get going. Now, on the way back up into the Friday close, they just couldn't get above it. So this is what we're left with. So what was our plan of attack? Okay, well, the best thing to do is go back and watch last Sunday night's review and Rev-UP. Be talking with your coach. We'll put the links in the descriptions down below. All right, so let's go back to the daily chart. What do we do with this information that we have here? Well, the first thing we're going to do is we're going to wait for our setup to repeat, obviously, right? We're going to make sure that we have all bases covered. Let's go ahead and take a look at what was the news for last week. Now here's the deal. It was a very, very sparse news week, just in the fact that we had a bank holiday right in the middle of it, New Year's Day. We had unemployment claims early Thursday morning. But the big news that we had to wait all week for was the ISM manufacturing PMI, 10 a.m. Friday. Now, let's bring in what happened. First thing I want to recognize is we are in chop zone. Chop zone. We break through the 20-period simple moving average. It moves the 8 down with price. So therefore, we're wondering what happens. Do we go straight to the 200 or we come back to the 20? And if we get to the 20, what does it do? Okay, well, the first thing that I'm going to point out is when it touched the 20 period simple moving average that was already downward sloping, they sold it. Okay, so that's our clue. So we're wondering, okay, so if they bring it back up a little bit Sunday night, early Monday morning, coming into the week, are we able to sell into this? Yes. Reversal on Friday. Okay, so now let's take a look on the 4-hour chart, how this played out. Now, the first thing I want to point out is crypto started to catch a bid after it sold down into the 91,000s, right? So I'm going to let you understand that. To me, that signals a plausible risk on coming into the end of the week. All right, so now let me show you what I mean. The one thing that I want to point out is on the 4-hour chart, we have this breaker block here. Okay, so the breaker block is the lowest level point, right? The downward movement of a head and shoulders pattern, right? So this would be the breaker block. Now, so as we're coming into this week, what do they do at the breaker block? Now watch this. This was the highlight of the week on Friday. We were down here because we have an order block here, right? They break through, they find liquidity. They do a draw on liquidity. So they come back up into here. And as we're into this 29, 30, 34 level, 38 level actually, 38 Mancini, what I said was we have to watch this level here. Okay, now this level was 65, roughly 65. Why? Because look, it's the bottom of the breaker block on the 4-hour chart. Okay, possible mitigation. And what I want you to think of is it is in line with the low of this. So I can click on this though. All right, so what we have here is a breaker block, which is the highest closing bar in the series. Okay, now what that means is the median threshold lines up with this lower level. So what we're watching is what happens when we get to it. So when we were at 29 to 38, 29 was the signal, 38 Mancini. Okay, did we reclaim 38, go to 51? I told everyone, watch for 65. Now we got to 65, sold back into the 38s, and then went to the top of the order block. Now, setting up to that, what you see is just a series of sellers taking advantage of the 8 EMA. Look at what happens when it goes above the 8 EMA into the 20, grabs liquidity, and now we're back off to the races, and we would call this the 4-hour fractal. Oh, we're going to get a gem here today, folks. Those of you that have watched this far into the video, I want you to type the word fractal into the comments because I'm going to give you a gem. So this price and the 8 EMA going through the 20-period simple moving average at the same time, turning both of them up into the same direction as price is going, is what we call the fractal. Now, let's say that this is a 15-minute chart. Don't look at this as a 4-hour chart. Look at it as a 15-minute chart. What are we no longer doing on the 2-minute? Shorting, correct. So now what we want to do is now this may be off because the fractal may be off by a little bit, and you'll see what I mean. You could probably say that this would probably look better on a 30-minute or a 1-hour chart, but let's take a look. If we were to go and say that this is a 15-minute fractal long, that means we would only be taking longs on the 2-minute chart because the 20-period simple moving average would be moving through the 200-period simple moving average on the 2-minute chart. Let's take a look at the 15-minute chart and let's see what it does. Let's take a look at that time. Okay, it's the last 2 bars of Friday. Here's how it works. If we have 4-hour bar, okay, times 2 bars equals 8 hours. Okay, so now what we want to do is we want to divide the 8 hours into 15-minute segments. How would we do that? Times this by 4. And this is how many 15-minute bars we're going to count back. We're going to go 32 bars back. Let's take a look. Let's leave this right down here or out of the way. And we're just going to go 32 bars back. Okay, well, now I'm going to assume 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, this is going to be right about 32 bars. Now, notice within that time frame, the 20-period simple moving average goes through the 15-minute 200-period simple moving average. So therefore, you're only looking for longs on the 15-minute chart. Perfect, huh? Perfect. Fractals. Amazing how they work, right? Absolutely astonishing how they work. So earlier in the week, we were looking for pullback shorts. Later in the week, at the very end of the week, we were only looking for pullback longs. All right, that's the review. What's the Rev-UP? Let's dive right into this. What do I think is going to happen? What do I think could happen? All right, so the first thing that I want you to look at is there is a divergence in the NQ and ES bottoms. So what I'm watching like a hawk, before we even get into news and inside of the technical analysis, so then we're looking at what breaks here, or here, here, or here. Very simple. Now, here's the crazy thing. I'm watching to see, is this the draw on liquidity? That would be one for the ages if that's what they're going to do because of how shallow it is. Is this the draw on liquidity? Let me draw it again. Okay, is this the draw on liquidity? We're going to find out. Now let's find the order block. Let me see if this order block thing is on here. It's not, so I'll just draw it. Okay, order block by definition is the highest closing bar of the series. All right, so now look at how it came back into this order block, failed. So now, do they bring it back into the order block and fail? We have a fair value gap. Now remember, this is just on the NQ. Now, why are we looking at the NQ? Because the mega techs are running the entire process. Now here's the thing. Late last week, we had AI and chips take a massive move up. So I bought some Intel because Intel looks like it's really cheap. Now what we want to do is we want to see if the chip game or the AI game brings the entire market back up in terms of market capitalization. We want to see if the buyers continue to come in. If they continue to come in on the buy side, onto the bid, if they continue to find a bid. In the NASDAQ 100, there's a high probability that we could start to find a bid in the ES. Is the ES signaling with this higher low that is going to be the case? Did the tech stocks get just a little bit too oversold relative to the ES? This is what we're going to let play out. Now, let's get into the elephant in the room. Here it comes. All right, so next week, there is a ton of information coming out. Now, we have a bunch of Fed speak. Okay, great. Okay. Tuesday, 10 a.m., ISM Services PMI final. Wednesday, ADP. 1 p.m. on Wednesday, 10-year bond auction. 2 p.m. FOMC minutes. That will be very, very important. Okay, Wednesday, there's just a bunch of yellow folders. Okay, but Friday, 8:30, all hands on deck, non-farm payroll. We'll be there trading. We'll be ready to wait for our pattern to repeat after the nonsense and the tomfoolery happens, and we will move forward with our process. So it's going to be another hurry up and wait type week. The one thing that we do need to keep in mind is we had a very elevated range last week. This is an ATR of 1, if you're wondering, on the daily chart. So it's just showing the range. Now, 1, 2, 3, 4, 5, 6, 7. Okay, so now 44.25, I believe that's what this number is. What we're going to be watching for is, do we start to trade above or below 44.25 coming into Sunday night, Monday morning? That will dictate the rest of the week, if you ask me, because if we are outside narrow range when there's not any news until next day or a couple days from the day that it goes outside of narrow range, we could be the market could be showing its hand. Okay, now the thing is, it narrow? Does it go wide range, high volume when it goes underneath this bar or above here? That's what we're going to watch for. We're going to watch for content, context, and location, and clearly defined trend. Okay, right now, depending on how far you have this thing zoomed out, you could be either bearish or bullish. For me, I'm following the KISS chart on the daily chart, the weekly chart, the monthly chart, and it's still bullish. It's just in a little bit of a chop zone at this time. Does the chop zone take us down to the 200, or does it not take us to the 200 on the daily chart? That's what we're watching. Thanks, everybody. We'll see you tomorrow morning, 8 a.m. in the Discord. Link will be provided. Thanks.